Hi there, this is John, and congratulations, you just got done reading the Psychology 101 chapter, which I think is actually the most important chapter in the book for a discretionary trader. Okay, if you're a mechanical trader, you don't have to worry about the psychology, but the fact is that a good discretionary trader can actually beat a mechanical system every time if they can get the psychology right. Now, I'm going to show you something today because today is April 4th. I had actually a pretty tough day today. All my positions, the way I was positioned, didn't work out. Took some stops, and this is a day where I lost money trading, and this is where, of course, the psychology comes into play. And one of the strategies I've been doing here on Apple is that anytime it just near the close, I'll do some trades on Apple, but I'll essentially buy it near the close and then flip it out the next morning. It's actually proved to be an incredibly profitable strategy. So you buy it at the close, and what I'm doing here is doing option plays. So I'll buy an in-the-money Delta 70 option and flip it out the next morning. And so as you go along here and you see this, the strategy has been quite effective. Okay, and this one I remember, and it's like a bonus if a squeeze sets up here as well. So a squeeze sets up into the close, great, you take a position, and here the next morning, this thing just goes crazy. These are, you're buying options and flipping them out the next morning. And here's another example here. You buy it, bam, flip it out the next morning. Okay, coming along here. Now, on this particular day, what happened here, and what I found is that here I bought it, and anytime it gapped down, then all I would do is just pick up, if I had like say 10 contracts long, I'd pick up another 10, and then once you got to a 50% retracement, I'd flip it out for a scratch trade. Okay, so the point was here is that, if it gapped down, I did have a hard stop in place, but if it didn't hit my hard stop, then, like for example, before prior support, I'd give myself an opportunity to get in and get out for a scratch trade. So what was nice about the strategy is on the trades that were winning, I was making a lot of money, and the trades that were losing, I was able to kind of scratch. All right. And so we go along here. Now, on this one, okay, so this one was a stop, obviously. So got in here, it kind of came down, and in fact, I had a hard stop here, and it opened at that. So that was, that was like, okay, well, that's great. So it's been working like 5 out of 6 times. That's fantastic. Here's another one. This was fantastic. It just went cruising higher and higher and higher. And this one really didn't give any sell signals, so I ended up just holding it. In fact, into the next day. So that was fantastic. So sold it. So that was, a really, really solid trade. So here we are. We got the close here. So we're actually near the all-time highs. So I loaded the boat here. This morning gapped down. And as I said already, what I did is then added some more contracts looking for that 50% retracement move. Okay, and then had a hard stop under, or a hard stop right under, a little bit under that level. So, which took us down to about right about there. So as I'm sitting there, I add in the contracts. We don't get the 50% retracement, and we just sell off and off and off. And as we get down here, I had to get out of the trade. Now this was a big hit. When I bought these options, the stock was at 630. This is down here at 620. Okay, and so that was not a fun. That was not a fun trade. And of course today, this is a big selling day, and Apple was actually down fairly solidly today. So I'm just saying, so my point here is that, no matter how long you've been trading, you're just going to have days where it just doesn't come together. So not only did it not retrace where I could get out for a scratch, it actually just kept pounding. It was actually a big move lower. It wasn't like a 3-point gap down. It was, gap down 6 and just keep going. So this is a big hit today. So here's a couple things I'd like to kind of share with you as well, and I talked about this a lot in the book, but I kind of made some PowerPoint slides here just to really hit it home. And this is kind of what it felt like on that last Apple trade. And I say this like, let me repeat: if the trade feels like easy money, then guess what? Human beings all think the same way when it comes to greed and fear. And if you think it's easy money, then everyone else does too. Okay, and I gotta say, that trade to me felt like easy money. Apple has this well trained. If you buy calls, it pops back up. And, I have to say I was probably getting into a little bit of a lull there where I just assumed that the trade would work out and say, bam, there you go. And it's interesting as a trader because when you see a stock like Apple going higher and higher and higher, you keep thinking of like, well, and I've had conversations about this with Tom Sosnoff. I'll be on when I'm on the Tasty Trade radio show with him once a week, and where it's been actually difficult. Even when Apple was at 550, I'd talk going, wow, this thing, it's so overbought here. But, I saw these setups and I just had to take them. I knew at some point it would come to an end, and, who knows, I don't know if Apple's topped out yet or if it's going to keep on going. But I do recognize that today I was a little complacent because I was like, oh wow, Apple, that's easy money. And here we go. If the trade feels like easy money, then guess what? So there you go. So I just think no matter how long you've been trading, these are lessons that always come up. You just gotta be aware of that. On the flip side, and this is equally important, if the trade feels almost impossible, it also feels like that to everyone else too. Okay, and this is a kind of something I've got on my kind of the post-it note, is by doing that which is psychologically uncomfortable, by taking the difficult trade, you make the money being lost by the other 90% of all traders, period. Okay, and for a while there, buying calls on Apple was the hard trade, because it's like, gosh, it's come up so high. It can't possibly go any higher. Like, it would have been easier to short it, right? Because it's like, oh, gosh, it's got to come down. And for a while, the harder trade was buying call options on Apple. But now it's almost gotten to the point where it's routine, where it's become the easy trade. And that's what I always kind of caution on, is that when something starts feeling too easy, that's about the time that that trade is going to stop working out. And the other thing here that's hard that I've noticed too with a lot of people is everybody is almost wired to take small profits, to take profits too soon, but to let losers run. And psychologists have proved this, that essentially if someone's up, say you have like one option contract and you're up $100, well, suddenly when you see that profit, the fear of having that turn into a loss becomes very, very apparent. And at that point, if you're up $100, a lot of people will just drag up a stop, where it's a tight stop, it's at a break-even stop, and then get stopped out, or worse, they'll just sell it like, wow, I got $100. Okay, but if they're down $1,000 on one contract, then they'll risk another $1,000 just to get back up to scratch. And so human beings are actually wired to take small profits, because once they have a profit, then suddenly they don't want to risk anything anymore. And then they're also wired to take large losses, because if you've got a $1,000 loss, you're wired to say, well, that's okay, I'll risk another $1,000, I'll let it keep going against me in the hope that it comes up and I can get out. Okay, and of course that does not work in the long run. And so again, it comes back to that which is unnatural and uncomfortable in trading leads to success. And one of the most unnatural and uncomfortable things to do is hold on to a winning trade. Okay, it's just, wow, you've got, because how many times have you been in a winning trade and it comes all the way back down and stops you out at a loss? Okay, so people get trained to want to take profits quick, but it's that one runner, like a month or a quarter. If you bought Apple at 500 and you held on to it all the way to 600, that makes your entire year. Okay, and that's what you want to watch out for. So thinking about the money is poison. Okay, you got to trade the market, not the money. And the market, you got to think about this. The market is completely neutral. It doesn't know what a lot of money is. It just knows how to move. Okay, it doesn't know that you're up $1,000 or up $10,000, and it doesn't care. It's just going to do what it's going to do. So you got to really get your mind off the money, and you got to focus on the actual market. Okay, you might be up 6 ticks and start getting nervous, but the market care less about your feelings, because all it wants to do is go up 60 ticks or 600 ticks, or or who knows. So just kind of remember that when you're in a trade. So in closing, I just kind of want you to remember this and think about this. The next time you're going to take a profit, are you going to take that profit based on what the market is offering you, based on its own internal dynamics, okay? Or are you going to superimpose an artificial ceiling on your potential as a trader based on an irrational internal psychological bias regarding how much money over what period of time is too much too fast? Okay, that's kind of a mouthful. But that's essentially what we always do, is when if we start taking profits too soon, we stop looking at the markets and we start superimposing artificial ceilings on our own progress. Okay? So hopefully you found this useful. I got to say, I mean, all the psychology stuff I've learned from the School of Hard Knocks. It wasn't something that's like, oh, sure, that's common sense. As a trader, you always try, the stuff that makes sense to you, and for a while it works out, and then when things start not going your way, that's when you realize that you've got to focus on overcoming the natural inclination of a discretionary trader, to blow themselves up. Okay, because the natural inclination is to take small profits and take large losses, and you've got to reverse that. And if you can reverse that and focus on the markets and not the money, you can actually do this for a living and catch some nice trades. All right, hope that helps, and enjoy the next chapter.